The flavor of the month so far has been definitely PSU banks and some of the other PSE stocks. With the PSU bank index gaining about 40% so far in the month of Feb, the PSE index has also surged more than 20% during the month itself. But even after the significant run up in prices that we have seen in recent times, the valuation picture for most of these stocks is not looking extremely overstretched. Let me break this into two parts and show you how the banking stocks compare to their 5-year average of valuation along with the PSE sector, which is also trading at a discount as compared to its 5-year average. Starting off with the banks. Now, some of these smaller banks like IOB and Bank of India have surged more than 70% during the month itself. For IOB, the price to book is nearly 2 times as compared to 0.6 times 5-year average. But for Bank of India, the discount, the premium is not so high. You have 0.6 times price to book as compared to 0.3 times price to book for the 5-year average. Some of the banks which are at a discount are Indian Bank along with Central Bank of India. Despite the fact that these stocks have run up about 45 to 60% in the month itself, they both trade at about half a time book as compared to 0.8 times 5-year average as well. State Bank of India, which is the largest one, despite the fact that it has surged about 45% in the month itself, the price to book is just a little over 1x as compared to 0.8 times 5-year average. Once again, the smaller banks like Union Bank of India, PNB, Canara Bank, all of them are trading at a significant discount as compared to their 5-year average book value. And most interestingly is that still, most of these banks are trading at less than 1 time book. So, from the list that I have, only SBI and IOB are more than 1 times book. So that's the kind of discount that we are referring to. Now, moving on to the PSE stocks, some of these, once again, despite the significant run up in prices, their valuations are still at a discount to their 5-year averages. ONGC, for instance, has been the top gainer in trade this month, 35% up move that we have seen in this stock. But the valuation picture is more or less in line with the 5-year average, trading at nearly 13.5 times price to earnings as compared to 11 times 5-year average. Coal India, 25% is the up move that we have seen in the stock price, and it still trades at a discount to its 5-year average. 6 times is the price to earnings multiple that we have seen versus 14 times price to earnings multiple on an average basis. Power Grid, more than 20% increase, 12.7 times price to earnings as compared to 5-year average of once again 12.7 times. NMDC, once again we have seen a 20% jump in the prices, 9.2 times is the price to earnings multiple as compared to over 10.5 times that we have seen. NTPC, once again at a discount to its 5-year average. The stock has still managed to jump more than 20%. Similar is the case for GAIL India as well. 20% is the up move that we have seen in the month of Feb. The stock still trades at about 7 times price to earnings multiple as compared to 16.5 times 5-year average price to earnings multiple. You have the oil marketing companies BPCL along with IOC also, which are reasonably valued as far as the 5-year average comparison is concerned. And then you have the likes of Oil India as well, which is trading at a massive discount to its 5-year average. The current PE multiple of Oil India stands at 3.5 times as compared to 9.5 times 5-year average. So these are some of the stocks that I wanted to highlight. Of course, you have HPCL as well. 15% is the up move that we have seen in this month itself. 15 times price to earnings multiple versus 10 times price to earnings multiple on an average basis for the last 5 years. So these are the stocks that I wanted to highlight from the PSU basket. Despite the fact that we have seen significant run up in both the PSU Bank index along with the PSE index, some of these stocks are still not looking extremely overstretched as far as their valuation picture is concerned, especially when you compare it to their long-term averages.